Yeah. Good morning, students. Welcome to the live virtual revisionary classes of CA Final Paper 3, Advanced Auditing Assurance and Professional Ethics. And today we are continuing with our previous session, which was held on Monday, Professional Ethics and Liabilities of Auditors. And in LVRC, we are trying to have unique feature, like we will be practicing the concepts with the help of questions, right? So what we expect that at least you are through with the content, so that when we are practicing the question, you are able to understand the concepts also. In case still if you find any difficulty, you can interact with the faculty, you can get back to us, right? But yeah, the pattern will be we'll be practicing the concepts with the help of questions. So with this, not taking much of the time, Harshad sir is there and he will be taking you through professional ethics and liabilities of auditors. And for the next session, since 20th is Monday, but it's Diwali also. So next LVRC will be on Saturday, right? So not taking much of the time, Harshad sir, over to you.
Thank you, ma'am. Thank you. Good morning, students, and welcome to today's session. So today we are going to cover the rest of the topic of the professional ethics. Now, how we are going to cover this particular topic, as ma'am said, we will be practicing more now. Okay, a quick revision, more practice, more focus on the solving the questions, so that you guys can understand how to answer a particular question in the exam. Okay, so this will allow us to understand how to answer the question. Okay, so just to give a quick recap of what we have discussed is we have discussed from clause 1 to clause 10. One was allowed to practice in his name. Second was pay or to agree to pay commission. Third is accept to or agree to accept commission. Fourth was entering into partnership. Fifth was securing professional work. Sixth was soliciting clients through advertisement. Seventh was advertising professional assignments and designations other than CA. Eighth was accepting positions of an auditor without first communicating. Ninth was accepting appointment of an auditor without verifying the requirement of 139, 140, and 141 of the Act. 10. Charge and accept fees based on percentage of profit and contingent upon findings. Now we will see some questions on 11, that is to engage in any other business. There are two type of allowance in that, where is generally permitted, where is unless you need to obtain a specific approval. Okay. So let us move to the questions, and meanwhile I move to the question. Any doubt anyone has? Any doubt? Okay, if no doubts, then let me move to the question. Okay. So quickly we will read the question and then we will discuss the answer on that. Very one good question, I wanted to take it up. It will clear our understanding of the topic.
M.S. Sharp & Co., a firm of chartered accountants, are the statutory auditors of Dynamic Solutions Limited, a listed company. During the financial year 2024 to 25, the Chief Financial Officer, CFO, of the company resigned, leaving the accounts department without senior leadership during the critical year-end closing period. The Audit Committee of Dynamic Solutions Limited approached C.A. Sharp, the engagement partner, and requested him to lend his firm's expert staff to the company on a temporary basis to oversee the finalization of accounts, preparation of the cash flow statement, and consolidation of subsidiary accounts. The company offered to pay a separate, substantial fee for these special services. C.A. Sharp, wanting to maintain good client relations, agreed to the request. His team worked at the company's premises for a month, prepared the financial statements, and handed them over to the board of directors. Subsequently, M.S. Sharp & Co. commenced the statutory audit of these financial statements. Examine the action of C.A. Sharp with reference to the provisions of the Chartered Accountants Act, 1949, and the Companies Act 2013.
Okay, so here is a question. There is a Messrs. Sharp and Company. They are doing the audit of Dynamic Solutions. Audit committee required them to do some finalizations of accounts. Sharp wanted to maintain good relations. They accepted it. Later on, commenced the audit, issued the report. The background of the case. So, what do you think in this scenario would be the problem, or if there is no problem? Take a minute, read the question, and then try to answer. Okay, so what do you think? What is the problem over here in this particular scenario? Anyone? No? See, we have to understand from the point of view that whenever a question comes, first understand what is the scenario, what it says. For example, in this case, C is sharp. Okay, he is doing audit. He is doing something else. Break it down. Okay, don't understand the question. Break it down. He is doing audit. He is doing something else. Now, this something else, whether it is allowed as per the CA Act or the Companies Act, that is the something you need to answer. Or the two things which are being done together are allowed, or do you have a permission to do all those two things as per the CA Act? That is, you need to answer over here. So, do you think there is a permission to do both of the jobs over here? Yes, no? Anyone? I assume yes, that there is a permission. If you are not answering, then I will take it as a yes. Okay. And if you say no, then answer. Okay. So in this particular scenario, okay, what happens is, first of all, the second activity that is being carried out, we will read that activity again. That activity is that the engagement partner was requested by the audit committee to lend his firm's expert staff to the company on temporary basis to oversee the finalization of accounts, preparation of cash flow statement, consolidation of subsidiary accounts. Okay, so the part where the problem arises is this: finalization of accounts, preparation and cash flow, and consolidation of subsidiary accounts. CA Sharp accepted, agreed to this request, and later on, and he prepared the financial statements also, handed over them to the board of directors. Subsequently, he commenced the statutory audit of these financial statements. Don't you think he's involved into the preparation of the financial statement at the same time he's auditing the financial statement? Yes, no? Don't you think he is also involved in the preparation and the auditing of the financial statement? Do you think it is allowed? It is something permissible? No. Very good. Yes, Geeta. Yes, Shailendra. No, it is not permissible. Now, why it is not permissible? Number one, it is not permissible because of self-review threat. So there is a self-review threat. What is self-review threat? Can anyone quickly tell me what is self-review threat? What is self-review threat? Anyone? No? This is threat to fundamental principles, okay, that talks about that when a chartered accountant reviews his own work,
whatever he has done, at that point in time, there is a self-review thread that, how you can identify mistakes in the work that you have done. Okay. There's a self-review thread. You will be biased. You will be objective when it will be coming to a self-review thread. Second problem here in this particular scenario is a clause that I'm yet to discuss. Okay. So that is clause 4, part 1, second schedule. If anyone has gone through the second schedule, can anyone tell me what is clause 4, part 1, second schedule? Clause 1, part 4, second schedule. Quickly. Anyone? Okay, so clause 4, part 1 of second schedule basically talks about if you express opinion where you are substantially interested on the financial statement, at that point in time, you will be held guilty of professional misconduct. Okay, so if you are substantially interested in a particular entity or a financial statement, and if you issue an opinion on that, so you will be held guilty of professional misconduct. Okay, so that is the clause 4, which basically governs, like you should not be issuing any opinion where you are interested. So the term which is used is substantially interested. And if you express opinion on that FS where you are substantially interested, you will be held guilty of professional misconduct. Okay, now here in this particular scenario, whether he is substantially interested or not, we will see in a while. But let's say clause 4 is also there. Now, another part that I want to discuss is section 144. Can anyone tell me what is section 144 and what are the requirements of section 144? Section 144 and what are the requirements? Anyone? No? Section 144 of Companies Act. See, you have to remember all these sections so that you can appropriately answer a particular question. Otherwise, in exam also, it will become very difficult for you guys to answer any specific question, because it may be on multiple things. Not only one particular clause, it will be on multiple things. Okay. Section 144 is about auditor not to render certain services. Auditor not to render certain services. So if auditor renders these services, very good, Kushi. If auditor provides these services, which includes your accounting and bookkeeping services, one of the part is accounting and bookkeeping services. So if he provides, then there is a violation of section 144. Okay. Plus, there is a disqualification also with respect to the section 144. So if a person who is an auditor, okay, or who is proposed to be appointed as an auditor, if section 141 says that if you are providing a person who directly or indirectly renders any service which is referred in 144, so providing the service 144 service will lead to disability and cannot be appointed auditor. So basically, you have violated section 144 also. Okay, so you have violated section 144 also. Now there is one clause that I will discuss specifically, okay, which talks about when you perform an audit where you are not seeing the compliance with the Companies Act. So, sorry. So, if you act as an auditor, of the company in contravention with the provisions of Companies Act. This will lead to part 2. Basically, it is it will attract clause 5 part 2, your second schedule. Clause 5 part 2 of your second schedule, that is, if you act as an auditor of the company in contravention of the provisions of the Companies Act. So here in this particular scenario, you will be held guilty not only of the one particular account, but there are multiple things which are coming into picture. One self-review threat, one clause 4, one section 144, section 141, your clause 5 part 2 second schedule. All these things are coming into picture. So when a particular scenario comes, you have to analyze from each and every angle in order to answer that question. It is not only related to one particular area, it can be related to multiple areas. So here, there are lot many things which are not appropriate. As a result, CA Sharp will be held guilty of professional misconduct. Clear? Any doubt on this part? Any doubt? Any doubt? No? Quickly, let us see the answer. Okay. How you are required to write the answer in these scenarios, in these questions. Basically, when you have to write the answer, you need to specify the provision first. Section 144, bookkeeping, accounting, clause 4, or whatever it is. Do the analysis like we did. Self-review thread, section 144 does not permit. Okay. Then clause 4, what is there? And accordingly, give your conclusion with respect to the whether he is guilty of clause 4, clause 5, section 144 of the Companies Act, 141 disability will be attracted. So this is how you need to answer the question in the form of provision, analysis, and the conclusion. This is something will also help the reader of the answer to understand what you want to say. What is your conclusion on the answer itself? Okay. Number 2, specify the full wordings of the clause, like clause 4 part 1 of second schedule, clause 5 part 2 of second schedule. Do not mention anything small. Clause 4 or just clause 5, don't do that. That will create a confusion in when the reader will read the exam, and it can lead to a marks reduction over there. Okay. So there is one doubt. Can you explain part 2 schedule to part 5? Clause 5 or part 5? Clause 5. Okay. Clause 5 second schedule part 2. So clause 5 second schedule part 2, what it talks about basically, it talks about if you act as an auditor of the company in the contravention of the provisions of the Companies Act, at that point in time, you will be held guilty of professional misconduct. Okay. So just to show you quickly. So it talks about act as an auditor of the company in the contravention of the provisions of Companies Act. Now this includes all the provisions. 141, you are disabled, you are still acting as an auditor. 144, there was a contravention, you still provided that service. Still, you went ahead and provided the services as an auditor. that means you act as an auditor of the company in the contravention of the provisions of Companies Act, and you will be held guilty of professional misconduct. Clear? Now, there is one similar clause that we have seen. Can anyone tell me why we did not apply that clause over here? Quickly, why we did not apply that clause? And which was that clause? Which was that clause? And why we did not apply that clause in this particular scenario? Anyone? That is kind of the understanding it is required. Okay. See, clause 9 of part 1 of first schedule talks about accepting appointment as an auditor without ascertaining the requirement of 139, 140, 141. Now, why I did not invoke that clause is that is something you need to check at the time of appointment. So before appointment, if your firm is providing this kind of services, then in that case, okay, clause 9 will also come into the picture. But here you are already appointed. You are already statutory auditors. And after the appointment, you are doing these kind of things in this particular scenario. So clause 9 will not come into the place because at the time of appointment, you verified. But after that, you provided this service, which resulted into a disability, non-compliance with the provisions, and all other things that we discussed. That's why clause 9 will not come into the picture. Clear? Any doubt on this particular question? So with the help of this question, we understood clause 4, part 1. We understood clause 5. We understood 141 some portion, 144 some portion. No? Okay. Not an issue. If no doubts, then let us proceed with the next question. Because now what we will be doing is we will be solving more questions, which will allow you to think on these topics, okay, how to approach it. It is an MCQ, but it is very good MCQ, I would say. Okay, so let's read this MCQ. We'll read it. Yeah.
CA. Samir, a chartered accountant in practice, is the Karta of a Hindu undivided family, HUF, which is engaged in the business of trading electronic goods. The business is managed by his elder son. CA. Samir's capital in the HUF is 15 lakhs rupees, and he receives a share of profit from the HUF. He is not involved in the day-to-day operations of the business, but occasionally provides business advice during family discussions. He has already sought specific permission from the Council of the ICAI. Which of the following statements is most accurate regarding CA? Samir's situation? A. CA. Samir is guilty of professional misconduct under Clause 11 of Part I of the first schedule as he is the Karta of a business, he has a substantial interest in it. B. CA. Samir is not guilty of any professional misconduct as the business is managed by his son, and he is not actively engaged in it. His role as a Karta does not automatically constitute engaging in business. C. CA. Samir is guilty of professional misconduct because he receives a share of profit from a business other than the profession of a chartered accountant. D. CA. Sameer is not guilty of professional misconduct because being a karta of an HUF and having an interest in the family business is permitted, provided he is not actively engaged in its management.
So take a minute, read the question again, and then try to answer. Like, what do you think? Is it permissible? It is not permissible? It is something a violation or not? So go through it, then try to answer this question. So here it involves CA Sameer, who is a Karta of HUF. He has given some capital. His son runs a day-to-day business. He is not involved into management and other things which are there. And there are options given A, B, C, D. Now you have to tell me which option is correct. Okay, guys. So what do you think? Is it something permissible? Which option is correct over here? Which option do you think is correct? Quickly. So what is the requirement for having interest in the HUF? Anyone? What is the requirement of having interest in the HUF? Quickly. Anyone? No? Okay. So let's understand what is the requirement of having interest in the HUF. It is part of your clause 11. Okay. Now we will come to study material, page 76. Yeah. Okay. Sorry, page number 79. Okay. Now, one such requirement in regulation where you have, where it is prescribed that whether it is a generally allowed or you need a specific permission. Okay, that is a regulation 190A. Okay. Now, under this regulation 190A, in the specific resolution conditions, there is one requirement for interest in family business concern. Now, provided this concern, okay, this concern is result of inheritance, succession, or partition of the family business. Okay. Second, management, like in management, you are not taking any part, active part. So first of all, you have a interest in the business concern, family business concern. Second, you are not taking any active part in the management. Plus, the council has specifically provided, okay, on page number, if you come on page number 19.82, there's a specifically provided that a member of institute can acquire interest in family business as in proprietor firm, as in partnership firm, or in the name of style of Hindu undivided family as a karta. Okay. But having said that, a member in practice which is engaged as a karta in HUF doing family business will be within the limits prescribed by the council if he makes the investment from the funds pertaining to HUF only, provided he is not actively engaged in the management of safe business. Means the condition is, first of all, you have to be, you can acquire interest in family business. And this is part of the special permission. So you have to take the permission. So this is part of the special permission one, where you need to obtain specific or prior approval of the council before acquiring the interest in the family concern. Okay. Then second requirement is if you are acting as a karta of a HUF doing family business, okay, do not invest fund from somewhere else. Invest funds from pertaining to HUF only, and then provide that you are not actively engaged in the management of same business. If you comply with these three things, if you obtain specific permission, fine. Otherwise, it will not be appropriate and it will be in violation of Regulation 190A and Clause 11. What is Clause 11 on? What is Clause 11? What is Clause 11 quickly, guys? Anyone? No? Very good, Somaya. Anyone? What is Clause 11? Okay. So basically, Clause 11 talks about that if you engage in a business other than the business of a CA in practice, engage in any business or occupation other than of a CA in practice, unless permitted by council to do so, you will be deemed to be held guilty of professional misconduct. Now, in our example, if we go back to our example, this is our example. So CA Samir, a chartered accountant in practice, is a karta. CA Samir capital in HUF is 15 lakh. Okay, he receives share from profit of HUF. He is not involved into day-to-day operations. He just occasionally provides business advice during family discussion. So, given this scenario, what do you think? What is the correct option now? Anyone? Given this scenario, what is the correct option? Very good, Khushi. Very good, Geeta. So the correct option is option D. Now, why? Let us understand. Option A, Samir is guilty. He is not. Reason because he has already sought specific permission. So how he can be guilty? Plus, he is not involved into day-to-day operations. He is a karta, HUF, but the business is managed by elder son. So he is not involved in that. His capital is 15 lakh, which is he is not investing. So he should not invest. His capital is there as a part of the business, but he is not investing. So how he can be guilty? Okay, because he has substantial interest? No, we just now saw. B is not guilty of any professional misconduct as business managed by son. He is not engaged. His role as a karta does not automatically constitute engaging in business. That is incorrect. See, from here, it is fine. But his role as a karta does not automatically constitute engaging in business. It does. That's why you have additional conditions which says that you need to specify that you are not actively engaged. Being a karta usually counts you are actively engaged, but you have to specifically provide a declaration that you are not actively engaged. Okay, so that's why B is incorrect. C, Samir is guilty. We have already seen he is not guilty. D, he is not guilty. Being a karta of HUF, interest in family business is permitted, provided he is not actively engaged in the management. And he has sought already specific permission for that. So option number D is the correct option and more relevant one compared to the B one. Any doubt? Any doubt on this? Okay. We will see one more question. Very good question. Sorry. Okay. So let's read the question.
CA. Mehta is the sole proprietor of M.S. Mehta and Associates, a firm of chartered accountants. He employs CA Verma, a qualified chartered accountant who does not hold a certificate of practice, COP. In June 2024, CA Mehta had to travel abroad for a family emergency for 2 months. Before leaving, he gave CA Verma general authority to manage the firm's routine affairs and client communication. During CA Mehta's absence, a long-standing client, a bank, requested an urgent stock audit report for one of its borrowers. CA Verma conducted the audit, prepared the report on the official letterhead of M.S. Mehta and Associates, and signed it as follows: for M.S. Mehta and Associates, SD-CA Verma, Chartered Accountant. The bank accepted the report based on the firm's reputation. Upon his return, CA Mehta reviewed and ratified CA Verma's action. With reference to the Chartered Accountants Act, 1949, is CA Mehta guilty of professional misconduct? A. No, because C.
We will go to the options. First, take a minute, read the question again. Okay. Then we will go to the options. Take a minute, read the question, and then we will go to the options on that. So here there is a CA Mehta, then there is a CA Verma, who is an employee who conducted the audit, prepared the report, signed it on behalf of CA Mehta. Okay, and that he submitted to the bank. That was rectified by CA Mehta. Okay, reviewed and rectified by CA Mehta. Now that is in particular, summary of this particular question. Let's see the options.
A. No, because CA Verma is a qualified chartered accountant and an employee of the firm, and his actions were subsequently ratified by the proprietor. B. Yes, because CA Mehta allowed a person who is not a chartered accountant in practice to issue a report on behalf of the firm, which amounts to allowing him to practice in the proprietor. C. No, because the act was performed under a general authority during the proprietor's unavoidable absence, and a stock audit report is not an attest. D. Yes, but only CA Verma is guilty of misconduct for falsely holding himself out to be in practice. CA Mehta is not guilty as he did not personally sign the report and was not in the country.
So now, given these options, what do you think? Which is the correct option? Now it will be very easy for you guys. Okay, will be considered as deemed to be in practice. Fine. Anyone? Very good, Geeta. Anyone else? With a different answer? Anyone else with a different answer? Okay. Okay, so let's understand. So there are two clauses which we need to discuss here with reference to this particular question. Number one, clause that we have already discussed, that is the clause number 1. Okay. Yeah, clause number 1 that we have already discussed and seen. So what is clause number 1? So basically, if we go back to the clause number 1, if you allow to practice in his name, like in the name of that particular CA in practice, in that case, you will be deemed to be held guilty in, of professional misconduct, unless that person is a CA in practice who is either your partner or employment. That's the exception which is there in the clause 1. Clause 12, allow anyone to sign FS on firm's behalf. Okay, not FS, but the report here we are referring to. So if you allow anyone to sign on firm's behalf, but any CA in practice, partner, or this member one that we have to discuss part. Okay, this is a very important part that we have to discuss. Okay, so let's go to the study material and let's go to the clause number 12. Okay, it says that if you allow a person not being a member of institute to practice, or a member not being his partner to sign on behalf of firm any balance sheet, profit and loss, or report or financial statement. So who are allowed over here basically is, if you see, member of institute, in practice, or member, okay, or member not being his partner. Means member being his partner is fine. So if you allow a person not being a member of institute in practice or a member not being his partner to sign, then guilty of professional misconduct. Means if a member of institute signs who is in practice, basically CA in practice, plus either who is member being partner, in that case he can sign on your behalf, but otherwise no one can sign on your behalf. Now this is very important part when I talk about this member, okay, being his partner. Now my question to everyone is, can CA not in practice become partner? My question to everyone is, can a CA not in practice become a partner? Yes, no. Can a CA who is not in practice, who is a member but not in practice, can become a partner in a CA firm? Very good, Khushi, very good. Answer to this lies in clause number 4. We'll go to the clause number 4 for this. So let's quickly go to the clause 4. What clause 4 says? Clause 4 talks about that if you enter into a partnership inside, outside India with any person other than the CA in practice, or such other person who is a member of other professional body having such qualifications, or whose qualifications are recognized, then fine. CA in practice is not equal to member of institute. That means you cannot enter into a partnership with a member of institute. It has to be a CA in practice. Now, and when I talk about this regulation 53B, which is member of any professional body having such qualifications, it includes company secretary, cost accountant, advocate, but does not include a chartered accountant. If you go to regulation 53A3, again, which is given above, it includes company secretary, cost, actuary, bachelors of engineering, technology, architect, everyone, but does not include a chartered accountant. That means, and if you have to do a partnership with a CA, he has to be in practice. You cannot do a partnership with a CA who is not in practice. And if we cannot do a partnership with a CA who's not in practice, basically you cannot allow him to sign on your behalf. Okay, so now here CA in practice cannot become partner. Answer is CA who is not in practice cannot become a partner. The answer to this is no, he cannot. If he cannot become a partner, he cannot sign on your behalf because he cannot become a partner. So who can sign? Member of institute in practice. Okay, member of institute in practice can sign on your behalf. Any which ways, if you, and clause 1 which says that if you allow anyone to practice in your name, unless and until that person is a CA in practice who is in either partnership or employment, then it is fine. Otherwise, it is not fine. Now let's go back to our question that was there. Our question says that here in this scenario, CA Verma, a qualified chartered accountant, does not hold a COP. Does not hold a COP. Okay, he is employment, but he does not hold a COP. Now he signed. What he signed? Conducted the audit, prepared the report, okay, and signed, which was accepted by bank. Now tell me, what do you think? Is your answer still the same? Is your answer still the same? Yes, no? This is very important part. Very good, Sabhay. Very good, Ajita. Yes, come on. Is your answer the same that was earlier? Or what is the answer basically in this scenario? Okay, let's go to the options. First says not a misconduct, not guilty of professional misconduct. Basically, qualified chartered accountant and employee, his actions were subsequently rectified by the proprietor. No, wrong. Doesn't make any difference if we rectify. B, yes, guilty of professional misconduct because CA Mehta allowed a person, not a chartered accountant, to practice and issue a report on behalf of the firm, which amounts to allow him to practice in the proprietor's name. Could be. Again, option C, which starts with no, irrespective, like, it's not a general authority. There is no such general authority. Okay. And D, yes, but only CA Verma is guilty. Answer is no. The guilty will be a chartered accountant who allows chartered accountant in practice. Remember, part 1 is applicable to CA in practice, not to CA Verma. So it is applicable to CA Mehta in this scenario. As a result, D will also be a wrong answer. The correct option is B. Clear? Any doubt with this? Any doubt on this question? No? No doubts? Can we take a quick another question on similar lines? Again, it will provide us a good understanding of the topic. Okay, let's take quick another question. Now, this will be pretty much easy if I say compared to what we have seen now, because we already discussed this topic. Okay.
MS Khanna and Associates, a reputed partnership firm of chartered accountants, has two partners, CA Aman Khanna and CA Bimal Jain. The firm is the statutory auditor of Zenith Tech Limited, a listed company.
Okay, so there is a firm, Khanna and Associates, two partner, Aman Khanna, Bimal Jain. Okay, they are the statutory auditor of basically Zenith Tech, a listed entity. Okay, so let's read the subsequent part.
For the financial year ended 31st March 2024, the audit was completed and the audit report on the financial statements was signed by CA Aman Khanna. Subsequently, Zenith Tech Limited was required to submit a certificate to a regulatory authority, confirming the value of its investments as per the audited balance sheet.
Now here they have to submit a certificate to the regulatory authority confirming the value of its investment as per the audited balance sheet. Okay, fine. Let's see what happens next.
Due to an urgent personal matter, both CA Aman and CA Bimal were traveling and were unavailable to sign the certificate. They instructed CA Charu, a qualified chartered accountant, not having corp, who has been employed with the firm for 10 years and was the engagement manager for the Zenith Tech Limited audit, to sign the investment certificate. The certificate was signed by CA Charu on the firm's letterhead as, for Khanna and Associates, CA Charu, Chartered Accountant, M known XXXXXX.
That's basically membership number that she will mention of the like whatever she membership number she has. She's not mentioning FRN, she's mentioning her membership number. Okay, so this is the particular question. Now tell me what is let's go to the options. Okay, and then we will see what is the correct option.
A. No one is guilty of professional misconduct as CA Charu is a qualified chartered accountant and the certificate was based on already audited and signed financial statements. B. Only CA Charu is guilty of professional misconduct for signing a certificate on behalf of a firm in which she is not a partner. C. The firm, M.S. Khanna and Associates, is guilty of professional misconduct under Clause 12 of Part I of the first schedule for allowing a person who is not a partner to sign a report on its behalf. D. Only the partners, CA Aman and CA Bimal, are guilty of other misconduct for being negligent, but not specifically under Clause 12, as the primary audit report was not signed by the employee.
So these are the options. Now, based on the given scenario and the options, you tell me which option is correct. So have a good read of the question again, take a minute and then try to answer. Okay, this is the question. I'll zoom in and then we will go to the answers. Take a minute, read the question again and then try to answer. I need answer with a particular clause why you say the answer which is you are saying. Okay, now tell me, which is the correct answer as per you, and why do you think it is a correct answer? So these are the options. Which is the correct one and why? Okay, Rajita, very good. But the reason? Okay, Samanathan, very good. What is the reason? Okay, very good, Samanathan. Anyone else with a different answer? Something else to some different option? Anyone? What do you think will be the correct option over here? Pretty straightforward. We have discussed this particular part right now. So I don't think so it should be that much complex for you guys. Okay, let's go to the options. Option number 1, which says no one is guilty of professional misconduct, as C.A. Charu is a qualified chartered accountant and certificate was based on the already audited signed financial statement. Do you think this is the correct option? And if not, then why? No one is guilty. Do you think this is the correct option? Like it is already based on the audited signed financial statement. So is it fine if we issue a certificate which is already based on the signed audited financial statement and the person who is issuing is not a member in practice or a CA in practice? Is it fine? Yes, no? No. Very good, Geeta. Yes. It is not fine. So here this option is incorrect. Option number B, only CA Charu is guilty. Sorry, no, because someone else has allowed her to sign the report. That person will be guilty. So option B is also incorrect. Option C, the firm Messrs. Khanna Associate, and option D says only the partners CA Amal and CA Bimal are guilty. Now tell me which is the correct option from the C and D. And if you say whichever option, then I need an answer for that. So option D says they both are guilty. Option C says the firm is guilty and the firm has two partners, CA Aman and CA Bimal. That is the partners in this particular firm. So which is the correct option and why? From C and D. Which is the correct option and why? Anyone? C or D? Quickly, C or D? Very good, Shailendra. Okay. C or D? So the correct answer in this particular scenario is C. The only reason why D is not the correct answer is other misconduct. Sorry, it is not other misconduct. It is the professional misconduct. Hence, option D is incorrect. And any which ways, you cannot hold partners liable. Yeah, they will be liable, but the first responsibility will be of firm, because that firm is allowing. Okay, so C is the correct option. Clear? Any doubt on this? So Somaya, C option is the correct option. Any doubt? No? No doubt? Okay. We will go and do a quick revision of the rest of the clauses so that we can understand what is there in those clauses. Okay. So we have seen till now clause 10. We discussed clause 11. If you engage in any other business, exception is unless permitted by council, you will be deemed to be held guilty of professional misconduct. Clause 12 was if you allow anyone to sign FS on firm's behalf. Again, you will be deemed to be guilty of professional misconduct. Part 2 is applicable to member in service. Okay. If you are a member in service, part 2 is applicable to you. Part 2 of first schedule. First one talks about pay or allow to pay, share from your employment to anyone. you will be held guilty of professional misconduct. Second, if you agree or accept any commission or gratification from people associated with company, again you will be deemed to be held guilty of professional misconduct. So that are the two clauses in your part 2. Okay, these are the two clauses in your part 2, your first schedule. Okay, now comes the part 3. Part 3, first schedule, which talks about professional misconduct, but for members in general. It has 3 clauses. One, not being a fellow of the institute, you act as a fellow member of institute. You are not a fellow, but you act as a fellow. You will be deemed to be held guilty of professional misconduct. Clause 2, do not, if you don't supply information required by or called by institute, and when I say institute, it's not only the institute, it's its committees, director discipline, board of directors, disciplinary committee, quality review board, council, appellant authority, all these will be part of the institute. That's why I have added the symbol plus. Clause 3 talks about while inviting professional work from another chartered accountant and while inviting the tenders or items which are prescribed in clause 6 and 7 of part 1, if you provide false information, okay, then you will be deemed to be guilty of professional misconduct under clause 3. Clear? Straightforward, nothing difficult. Then comes the part 4, other misconduct. Okay, this is very important because this is other misconduct, members in general. What it says, guilty by court with a term less than 6 months. Okay, guilty of other misconduct. If you bring disrepute to the profession or institute, guilty of other misconduct, part 4. Okay, clear? Part 2, 3 and 4, straightforward, nothing difficult in those. Any doubt? Sorry. Any doubt? Okay. If no doubts, then let's quickly go to the second schedule. Again, they are straightforward, easy compared to what we have seen in the first one. The second schedule. Now here, if the matters are of the second schedule, they are placed before the disciplinary committee. Okay. Part 1, it is with respect to the professional misconduct in relation to the CA in practice. Now what it says that if you breach the confidentiality, okay, if you breach the confidentiality means disclose information that you acquired in the course of professional engagement to person other than client or unless required by law, you will be deemed to be guilty of professional misconduct. So only 2 exceptions are after the consent of client or required by law. If both of them are not there, then deemed to be guilty of professional misconduct. Okay. Second, clause 2 talks about if you certify or submit in your name or firm's name a report on examination of financial statement unless that you yourself have examined. So if you certify or submit a report unless that is reviewed by a partner, employee or another CA in practice, in that case you will be deemed to be guilty of professional misconduct. Means you issue a report without verification. Clear? You issue a report without verification. If that is the case, then you will be deemed to be guilty of professional misconduct. Sorry. Clause 3. If you permit your name to be used with estimates of earnings or kind of, where you are saying that you have vouched the accuracy of the forecast. If you permit your name to be used in this scenario, then you will be deemed to be guilty of professional misconduct. Clear? Okay. Then clause 4. If you express an opinion where you are substantially interested, we have discussed this. That is the clause 4. You will be deemed to be guilty of professional misconduct. Clause 5. If you 5, 6, 7, 8, 9, they are, always I take it in a similar line. Why? Because 5 talks about fail to disclose, 6 talks about fail to report, 7 talks about does not exercise due diligence, 8 talks about fail to obtain, 9 talks about fail to invite. Okay, so disclose, report, exercise, obtain, and invite. These are certain, 5 to 9. Disclose, report, exercise, obtain, invite. If you do anything which is, if you fail to disclose material fact, if you fail to report material misstatement, if you fail to exercise due diligence, if you fail to obtain sufficient information and evidence, if you fail to invite attention from material departure from gap, in that case, deemed to be guilty of professional misconduct. A set of standards, a set of clauses which is easy to remember, and always I take it together. Clear? Any doubt? Any doubt? Okay. So that was your till clause 9. Then we have a clause 10. If you fail to keep money in a separate bank account, okay, either which was given by your client, in that case, you will be deemed to be guilty of professional misconduct. Now there are two things which are allowed, exceptions kind of. One, remuneration, or you have an advance fee or fee or advance fee. So if you receive remuneration fee or advance fee, in that particular scenario, it is fine. Otherwise, you have to keep it in separate bank account. Or if you fail to use that money for specific purpose within the reasonable time, still you will be deemed to be guilty of professional misconduct. Clear? Any doubt with this? Okay. If not, then quickly we'll go to the part 2. Part 2, which is applicable to members in general. Now, unlike first schedule, where part 2 is members in service, here we have members in general, which talks about first, if you contravene any provision of the CA Act, regulation, guidelines, directions issued, in that case, clause 1 will be attracted. Being an employee, if you breach confidentiality, there are only two conditions allowed in this. One, permitted by employer. Second, required by law. Otherwise, if you breach the confidentiality or if you provide the information, deemed to be guilty of professional misconduct. If you provide false information to the institute, deemed to be guilty of professional misconduct. Remember, if you provide no information, clause 2, part 3, first schedule. If you provide false information, clause 3, part 2, second schedule. Now, this is only to institute. Only to institute. Reason, because if you provide false information to anyone else, it is clause 3, part 3, first schedule. Okay. And if you embezzle or defalcate money received in professional capacity, in that case, you will be held to be guilty of professional misconduct. And the last clause is, if you act as an auditor of the company in contravention of the provisions of the Companies Act, in that case, again, deemed to be guilty of professional misconduct. So 5 clauses in part 2, very important one. And the last one is part 3, where you have one clause, guilty of offense more than 6 months punishment, other misconduct. Okay, guilty of other misconduct. Clear? So these are the clauses of the schedules to the CA Act. Any doubt on this? Any doubt? No? If no doubts, let's quickly take up some more questions that we have. Okay. Very important questions. It will really help us to understand the topic. Okay. Okay. Straightforward question, nothing difficult. So let's read the question.
CA. Sonu has been practicing since 2008, specializing in corporate audits and company law matters. Due to his good practical knowledge, he was offered editorship of a company audit journal, which he accepted. However, he did not take any permission from the council regarding such editorship. Discuss the Act of CA. Sonu with reference to the Chartered Accountants Act, 1949 and the rules made thereunder. 4 marks.
Straightforward. Nothing difficult in this scenario. Took the editorship of a journal called Company Audit Journal. Tell me, what do you think? Guilty or not guilty? Guilty or not guilty? Guilty or not?
Not guilty, sir. Is a company audit related journals.
Okay, very good. Anyone else with some different answer?
As per class 11 of schedule.
Okay. Very good. Very good, Somaya. Anyone else with some different answer? Yes. So let's understand why not guilty. Okay. Why we would say not guilty in this particular scenario. And the answer to this particular question lies on page number 19.97. Okay. 19.97. Oh, sorry, 79. My mistake. 19.79. Let me. Okay. So 19.79, where we have discussed the clause 11. Okay. Specific permission or general permission. If you see in the general permission, where you are not required to take any approval, if you say that authorships of the books and article plus editorship of professional journals. Now, specific resolution means you are taking editorship of other than professional journals. So, general resolution, you are not required to take any approval if you are taking editorship of professional journals. Now, in this particular scenario, the question that we were discussing, here it is the company audit journal. Do you think it is a professional journal? Yes, no? Yes, it's a professional journal. Hence, if it is a professional journal, he did not take any permission in this scenario. Okay. Then not an issue because it was allowed under the general route. Okay. General permission was already there. It is professional journal. As a result, not guilty under clause 11. How will you write the answer? We'll quickly see the answer also.
Editorship of professional journal, as per clause 11 of Part I of First Schedule of Chartered Accountants Act, 1949, a chartered accountant in practice is deemed to be guilty of professional misconduct if he engages in any business or occupation other than the profession of chartered accountant unless permitted by the council so to engage. However, the council has granted general permission to the members to engage in certain specific occupation. In respect of all other occupations, specific permission of the institute is necessary. Editorship of professional journals is covered under general permission.
So, editorship of professional journal is covered under the general permission. Clause 11 requires, if you engage in any other business or occupation, then you need to take approval, unless permitted by council to do so, as per regulation 190A. Okay. Now here, it is under the general permission. So CSONU will not be held liable for misconduct for accepting editorship of professional journal because it is allowed. Clear? Straightforward. Nothing difficult over here. Any doubt with respect to this question? Any doubt? See, when you are writing the answer, okay, how you need to write the answer basically, understand again, I will take the word. Okay, once again, what we did is we started with the clause over here. Sorry. We started with the clause over here, this part. And I wrote the full name of the act. Okay, I wrote the full name of the act, clause 11, with a clause number, with a part number, with a schedule. Okay, and then the CA Act, whole act with the year. Now, this is something you need to write. This is how you need to write in your answer. Clause, part, schedule, CA Act with a year. Okay, so you can say CPS, that's a clause, part, schedule, okay, and CA with a year, CA Act with a year, and then you write a chartered accountant in practice is deemed to be guilty of professional misconduct if, then your rest of the things will start. So now from here your clause will start. If he engages in any other business other than permitted by council to do so. Okay, sorry. So if he engages in any other business unless permitted by council to do so, in that case, he will be deemed to be guilty of professional misconduct. This is how you first write about the provision. Then you specify the provision more, then give the analysis. This is the part where you need to provide the analysis. What is there in the question? Analysis, do not repeat the entire question. No. Analysis is not equal to repeating entire question. Don't do that. And the last part, which is very important, your conclusion. You have to specifically provide will be held or not held. Okay, specific. Be specific in your conclusions. And whatever, based on whatever provision, just provide the reference to that provision again. And this is how you need to provide the conclusion. So this is how you need to write a particular answer. Clear? Any doubt? No? Okay. If no doubts, what I propose is let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Okay. We'll take a quick 10-minute break. Yeah. Thank you. Hello everyone, welcome back. Let's continue the session. So we discussed one very important question. Okay, very good question. Now let's move to another question I want to discuss. So again, very good question will give us understanding of the topic. Let's read.
CA. P has been representing MS versus and Associates before Income Tax Appellate Tribunal for a case of income escaping assessment for FY 2016 to 17. There were unidentified credits in the books of accounts. CA. P was the statutory auditor of the company that time and did not mention anything about such credit in his audit report. Later, it was found that he had sufficient evidences to believe that these credits were liable to be taxed. In order to make his case stronger, he produces false documents and made witness present false statements. What do you think are provisions against CA? P under different acts?
So here you need to specify the different provisions which are there for CAP. What he did, he appeared for the case of income escaping assessments for 16-17. He was the statutory auditor for the company for that particular year. Did not mention anything such in his report. Later, when he has found that okay, he has sufficient evidence, that income will be liable to be taxed. In his case, to make the stronger, he falsifies the document. Now tell me, what do you think? What are the provisions of CA Act under which he can be held guilty, not guilty, or what will be the scenario? Quickly, I think pretty easy. We have like very easy scenario. Anyone? What is the particular requirement under the CA Act? Okay, in this scenario. So first focus on the CA Act. We'll focus on the CA Act. What are the clauses that will be attracted? Anyone? Which are the clauses that will be attracted in this particular scenario? Pretty much straightforward, easy, direct answer, I would say. Yes, no, anyone? See, here I expect a participation from your side. Reason because till that time you will not try to answer, you will not be able to get the understanding of the topic in much more detail. The purpose here is when I discuss the question, you participate, you try to provide the answer so that you can have certain clarity. And when I provide the answer back to you, you will have a good clarity of that particular answer. Anyone? Shailendra, Geeta, Samanathan. What do you think? Which clauses will be attracted over here? No? Okay. I'll tell you. See, in this particular scenario, in this given scenario, number one, what is happening, understand that. Break down the scenario to understand what is happening. What is happening is he was a statutory auditor. Okay, he was the statutory auditor of the company, and he did not mention anything about such credits. That means there were income escaping the assessment, or there were unidentified credits which were not mentioned in his audit report. The first thing is income not reported, plus he issued unmodified opinion. Okay, plus he issued unmodified opinion on that. Number two, later he found that he has sufficient evidence to believe that these credits were liable to be taxed. In order to make it stronger, he produced false documents, made witness present false statement. So false document to other authorities. So these are the two things we can derive from this particular question. Now for the first point. For the first point, which clause will be applicable? Income not reported and unmodified opinion was issued. Which clause you will attract? Anyone? Which clause will be attracted? Income not reported, but still unmodified opinion was issued. Can I say I will apply clause 6 fails to report material misstatement from part 1 second schedule? Yes or no? Fails to report material misstatement. Income not reported in this scenario is a material misstatement, yes or no? This part is your material misstatement and it was not reported. So can I say this is fail to report material misstatement? Plus, can anyone say that in this particular scenario, it is that fail to disclose a material fact in financial statement? It is income, okay, related to the financial statement. So fail to disclose material fact in FS. Reason because this income was pertaining to financial statement, like there is a failure to disclose that. Third, can I say does not exercise due diligence or grossly negligent? Okay, grossly negligent. Someone might also say that he failed to obtain evidence to support the opinion because he issued unmodified opinion. Okay, now which clause is this? Quickly, clause number, which is this? Fail to report material misstatement. Which clause is this? Very good, Somaya. Clause 6. Fails to disclose material fact. Which clause is this? Quickly. Clause 5. Very good, Khushi. Clause 5. Does not exercise due diligence or grossly negligent. Which clause? 7. Yes, very good. Clause 7. Fail to obtain evidence to support the opinion. Which clause? Quickly, quickly. Which clause? Yes, very good, Khushi, Geeta. Clause 8. Okay. Clause 8, fail to obtain sufficient information or then this is just point number 1 that we are talking about. Point number 1, nothing else. Now we will go to point number 2. Now let's talk about point number 2. Now point number 2 provides false document to other authorities. Which clause will get attracted? Anyone? Which clause you will you think that it will get attracted over here? Sorry. Which clause will get attracted? Anyone? provided false report to false document to other authorities. Okay, now here could be a doubt. Reason because some might say that if you provide false information, which is under clause 6 or 7 of part 1, or false information to anyone, clause 3 part 3, member in general. Let's go to the clause 3 part 3, member in general, to understand in much more detail. Okay, because that will really help us to understand this. So clause 3 says that while inviting professional work from another charter accountant, or while responding to tender or inquiry, while advertising through a write-up, anything as provided in item 6 or 7 of part 1 of schedule gives information knowing to be false. Now the question comes is, when you are providing information to income tax authority, does it fall under clause 3? So are you inviting professional work? Answer is no. From another chartered accountant, you are not providing professional, inviting professional work. Are you responding to tenders? In this case, answer is no. While advertising through write-up, is it an advertisement through write-up? Answer is no. Anything as provided for item 6 or 7 of part 1 of this schedule. Are you providing anything which is covered under part 6 and 7 of this schedule? Answer is no. Part 6 and 7 is about the advertisement and gives information knowing to be false. Yes, I'm giving information knowing to be false, but this is not something with respect to the advertisement. Okay. So clause 3 will not get attracted. It is not advertisement. Some might write, okay, I'm giving false information to others, it will come in that particular scenario, but it is not the case. It is only professional work, advertisement, tenders, inquiries, and whatever we have discussed in 6 and 7. So where it will get covered then? Anyone? Where it will get covered? Quickly guys, where it will get covered? Anyone? No? No? Okay, let me provide you an answer for this. Can I say it will be covered under clause 1 and 2 of part 4 of first schedule? One says that head guilty of any civil or criminal code for an offense which is punishable for an imprisonment for a term not exceeding 6 months. Now here, in the current given question, okay, what is the scenario is that he provide false information to the income tax authorities, for which the penalties under Income Tax Act, basically, okay, like 10,000 rupees or imprisonment, which may extend up to 7 years under the Income Tax Act. Okay, so there are penalties for providing false information under, I think, 278, 271, 278. So over there, he will be held guilty. There will be an imprisonment by civil or criminal code for an offense which is punishable for imprisonment for term not exceeding 6 months. If it is not exceeding, if it is getting more than 6 months, then clause 1 of part 3 of second schedule. Second, in the opinion of the council, bring disrepute to the profession, whether or not action related to his professional work. Now, in the given case, if you see, he is providing false information. So he's kind of bringing disrepute to the profession. Can I say these two clauses will get attracted, clause 1 and 2? That depends upon the term of imprisonment. So as of now, I can argue that clause 1 and clause 2 of part 3 first schedule will be applicable. Yes or no? Yes or no? So these are the things one may claim that they are applicable, and accordingly you can provide your answer. Like, clause 6, 5, 7, 8, clause 1, 2, all are perfectly fine. Yes, they can be applied in this particular scenario. Any doubt to this? Any doubt? Sir, here clause 3 part 2 second schedule will also not be attracted. Okay. Clause 3 uh, part 2 of second schedule. Very good one. So what it says, clause 3 part 2 of second schedule. So if you see clause 3 of part 2, it says that if you provide false information, okay, that is to the institute, council, its committees, board of director, board of discipline, quality review board, appellate authority, okay, if you provide false information to them. Now, income tax authority is not part of the institute, council, committee, director discipline, board of discipline, disciplinary committee, quality review board, or appellate authority. In that case, you cannot say that it will fall under clause 3, because it is kind of a scenario where you are providing false information, but not to institute. Clear? So in this particular scenario, what is applicable? Part 4 and the rest of the clauses that we discussed. Okay. Okay, it's part 4. Yes, Rajita. Yes, part 4, not part 3. My mistake. Yeah. I'll rectify this. Yeah. Okay. So now let's move to the next question. Very again good question I have for the discussion. Okay. Let's read the question first and then we'll try to answer.
For conducting the statutory audit for the financial year 2024 to 25, CAP has been appointed by C Limited, which is on the verge of becoming a sick unit and has accumulated losses, but the said losses are not equal to or exceeding its entire net worth as per the last audited accounts for the year 2023 to 24. The audited accounts for the years 2021 to 22 and 2022 to 23 were showing liability for payment of undisputed audit fees payable to predecessor auditors, but these were settled completely during FY 2023 to 24. In terms of Council General Guidelines, 2008, Chapter 7, read with the relevant proviso of the said guidelines, which of the following statements is correct in respect of the aforesaid scenario?
Okay, so this is a particular given case. Okay, now tell me here, for conducting statutory audit, CAP has been appointed of a company which is on the verge of becoming sick unit. The audited account shows 2021, 2022, there is a liability of undisputed audit fee payable to predecessor auditors. But these were settled during the completely during the FY 23-24. Okay. Now, in terms of these guidelines, what do you think? Anyone, like, what provisions will be attracted to this particular scenario? What provisions will be attracted? Anyone? What do you think will be the answer over here? Like what provision will get attracted? Read the question and then try to answer. What provisions do you think it will get attracted? Come on, guys, quickly. Very important reason, because this will require you to focus on the parts which are really really important. Like you have to read the question thoroughly for this particular question. Come on, guys. What do you think over here? Okay, I'll tell you. Now, in this particular scenario, see, what is happening basically is that there was a statutory audit for financial year 24-25. Now, it is on verge of becoming sick unit, but not actual sick unit. So this is not actual sick unit. Okay, this is not actual sick unit. On verge of becoming a sick unit, but not actual. Now, what is happening is there are audited accounts for 21, 22, 2022, 23, where we're showing liability for payment of undisputed audit fee payable to the predecessor auditor. So there's a liability of financial year 21, 22 and 22, 23 for undisputed stat audit fee. Okay. Now, if the undisputed stat audit fee is payable, do you think CAP should have accepted the appointment? Do you think CAP should have accepted the appointment? Yes, no? Quickly, guys. What do you think CAP should have done? Should he have accepted the appointment? Okay, Geeta, very good. Anyone else? Yes, Somaya, very good. Yes, Rajita, very good. Anyone else? Anyone on having different answer over here? How many of you say clause 8 will be applicable? How many of you say clause 8 part 1 first schedule will be applicable? Yes or no? If you say clause 8 part 1 first schedule is applicable, then in that case answer is wrong. Then in case answer is wrong. Now tell me why. I'll give you the answer. I gave you the answer. Clause 8 is not applicable. Why? Anyone? Why clause 8 is not applicable? No? See, that's where you need to understand the question. Okay, you might write an answer in exam that is clause 8 is applicable, but that is incorrect. You have to focus on each and every word of the question. In this particular scenario, what it says, but these were settled during FY 23-24 before accepting the audit of 24-25. So if these were settled during FY 23-24, by the time CAP was appointed for 24-25, there was nothing outstanding. What is the problem in that? Why there will be something which will be attracted? Yes or no? So here 23-24 was a year where everything was settled out. And 24-25 is a year where CAP is being appointed. Now here we are required to answer in terms of CAP. By the time he was appointed, there is no sick unit, there is nothing outstanding. What is the problem then? Why should we apply for clause 8? Clause 8 will not be applicable. There is no outstanding undisputed audit fee payable. No. By the start of 24-25, as it was already settled in 23-24, there is nothing outstanding. And hence, CAP will not be held guilty of professional conduct. No. As there are no undisputed statutory dues payable. Okay, quickly, these are the options. We will read the option and then you need to select one option. So we will read the options quickly.
CAP shall be deemed to be guilty of professional misconduct as he has accepted the appointment as auditor of C Limited, which had not paid undisputed audit fee for the year 2021-22 and 2022-23 of the predecessor auditor, though settled in FI
2023-24.
CAP would not be held guilty of professional misconduct as he has accepted the appointment as auditor of C Limited, which is on the verge of becoming a sick unit but whose accumulated losses are not equal to or exceeding its entire net worth as per last audited accounts for the year 2023-2024. CAP would not be held guilty of professional misconduct as he has accepted the appointment as auditor of C Limited, which is not a sick unit, whose accumulated losses are not equal to or exceeding its entire net worth as per last audited accounts for the year 2023-24, and there are no unpaid, undisputed audit fees of predecessor auditors. CAP shall be deemed to be guilty of professional misconduct as he has accepted the appointment as auditor of C Limited, which is on the verge of becoming a sick unit and it had not paid undisputed audit fee of the predecessor auditor though settled in subsequent year.
So these are the options. Which option do you think is the correct one? Quickly. Now we know the answer. You just need to pick up the correct option. Which option do you think is the correct one? Anyone? Which option do you think is the correct one? Quickly, I think now you will be able to answer the question because you know which option is correct one. We have discussed the answer. Very good, Geeta. Yes. Very good. Anyone else? Very good, Khushi. Absolutely correct. Option C is the correct one. Why? Reason because there are no unpaid undisputed audit fees of the predecessor auditor. Okay. And CAP will not be held guilty of professional misconduct just because he has accepted, whose losses are not equal to the exceeding entire net worth, plus there is no outstanding. In this particular case, CAP will not be held guilty. So the correct option is option C. The rest of the options are not the correct one. Okay. Any doubt? Any doubt? Very good, Somaya. Yes. Not an issue, Samanathan. Okay. If no doubts, let us proceed to one interesting question that I have. Now, this question really is something different than what we have seen till now. It's onto altogether a new topic for you guys. Okay. So let us see this question. I will read the question.
MS Global Auditing Firm, a network firm, is the statutory auditor for Pinnacle Bank Limited, a large public interest entity, PI. During the course of the audit for the financial year ending 31st March 2024, the audit team noted that the tax department of MS Global Auditing Firm had been engaged by Pinnacle Bank Limited to prepare the calculation of current and deferred tax liabilities and assets. These tax calculations, prepared by the tax department of MS Global Auditing Firm, were subsequently used by Pinnacle Bank Limited to record the accounting entries for income taxes in their financial statements, which are subject to the statutory audit by MS Global Auditing Firm. The income tax expense and related tax balances are considered material to Pinnacle Bank Limited's financial statements. Management at Pinnacle Bank Limited believes this arrangement is efficient and leverages the expertise within the global auditing firm network. Based on this scenario, what are the ethical concerns, if any, arising from MS Global Auditing Firm's provision of tax calculation services to their audit client, Pinnacle Bank Limited, a public interest entity?
So now I will break down few things for you in this particular question. Number one, there is an audit firm called Global Auditing Firm. They are statutory audit of Pinnacle Bank Limited. It's a PI entity. They have been, so tax department of this particular firm, okay, the tax department which is there of this particular firm is being appointed by Pinnacle Bank for the calculation of deferred tax liabilities and asset, subsequently used for accounting entries for the income taxes. Okay, income taxes and related tax balances are considered material to the Pinnacle Bank's financial statement. They believe this arrangement is efficient and leverages the expertise. Now, what are the ethical concerns based on this? What do you think are the ethical concerns? Very important part, trust me. Very, very important. Okay, very good, Samanathan. What else? Anyone else with some different answer? Yes, very good, Khushi. Very good, yes. Anyone else with any different answer? Okay. Now, answer to this particular question, I will explain you with one particular section of Code of Ethics. Now, this is directly related to the Code of Ethics. Okay. So, what Code of Ethics says in this particular scenario, we will understand that. Wait a minute. let me to share the screen. Yeah. So this particular part of code of ethics is known as subsection 604, which is tax services. Okay, what this tax service is about? Okay, subsection 604, tax services. Okay, now what it says, this subsection talks about that certain services are not to be provided because they can become threat to fundamental principles. So if you provide these services, then there is a chance of threat to fundamental principles. Now, what this threat is about, we will see. So there are 6 services, 5 services, sorry, which are given under this particular subsection. One is tax return preparation, generally considered low risk. Okay, if it is you are just preparing for them based on the available data. Tax calculation for accounting entries, moderate to high risk area. Okay, now there are certain scenarios where you cannot provide this kind of services, so it is prohibited, non-negotiable. It is for PI entities, you cannot provide material tax calculation, not allowed. For others, still moderate to high risk areas, you need to implement some safeguards in order to provide this service. Tax planning and advisory, again, depends upon the type of the advisory. It may depend from the subject, it depends upon the type, materiality, all those things. But if you are providing this particular service to a PI entity, not allowed. So tax advice depend on the questionable accounting for PI entities, advisory not allowed. Tax valuation, again, moderate to high risk, depend upon the subject matter and how this valuation is used in FS. Assistance in tax dispute, again high risk, because it is kind of an advocacy thread. Not only self-review, but it will result in an advocacy thread. So for PI entities, advocacy in material tax dispute is prohibited. So as per section 6, these are straight prohibitions, no, not negotiable. You cannot means cannot provide. Okay, now let's go back to the question. So our question over here was that global auditing firm was providing deferred tax liability and asset calculations. Okay, subsequently used for accounting entries. Now you tell me, what do you think? Is it fine based on what we understood? It is okay based on what we understood? Yes, no? Very good, Samanathan. Yes. Absolutely correct. Very good, Somaya. Yes. So based on whatever the subsection we just now saw, that is 6045A1, and I'm just providing the reference in the answer. Okay. Here explicitly prohibits public public interest entities when the calculations are material. It says that preparing calculations of current and deferred tax liabilities for an audit client for the purpose of preparing accounting entries that will be subsequently audited by the firm creates a self-review thread. And if you prepare, it is prohibited. It is not allowed. You should not prepare for an audit client that is public interest entity for the purpose of preparing accounting entries. In the present case, this is just the analysis. And this is the conclusion based on that. Okay. So that is the conclusion we had where we said this not as per the code of ethics. If I ask you which clause will be applicable? What will be your answer? We understood code of ethics, fine. We understood breach of fundamental principles, fine. We understood we are doing something which is not permitted by code of ethics, but which clause will be applicable? Anyone? Which clause should I apply over here? Okay, very good, Samanathan. Yes, absolutely correct. Anyone? What clause should be attracted over here? One such part is code of ethics. Perfectly fine. What else? What else? See, that's where we need to apply the analytical thinking. Okay, I can give you an answer like code of ethics, perfectly fine, matter over, closed. But it is not limited to that. Very good, Geeta. Let us see, let us go back to the study material in order to see some things that we have to discuss with respect to this answer. Okay, let's come to the page number 19.97. Okay, this is in relation to the clause 4 of second schedule. Okay, part 1, second schedule, where in his opinion, he issued an opinion on a financial statement of any business or enterprise in which his firm or a partner of his firm has a substantial interest. Okay, now what is substantial interest? Over here, like one of some examples are given, a detailed example, but if you see, one such example is given, like members not to write books of accounts for auditing clients. The council has clarified that the members are not permitted to write the books of accounts for auditing clients. In that case, this particular clause can be attracted. Okay, so there are chances that this clause will get attracted. So if you provide any services where there is a conflict of interest, it will be said you are substantially interested, and accordingly this clause can get attracted. Number 2, we have already discussed in our example, in our one of previous examples, I would say rather. Okay, what we discussed is section 144 will be applicable. Auditor not to provide certain services, accounting and bookkeeping. Second, if section 144 is applicable, then section 141 will be applicable. Disqualification. If section 141 is applicable, for sure, clause 5 will be applicable, that we have discussed. Act in contravention of Companies Act. Okay, if section 144, 141, clause 5 is applicable, I can say that he is clause 7, grossly negligent. So clause 4 is one such area, but apart from that, 144, 141, clause 5, clause 7 are the clauses where we can say that the particular firm will be held guilty of professional misconduct. Why not clause 1? Oh, sorry. Why not clause 9 of part 1 of first schedule? Can anyone tell me? Why not clause 9? I'm not again mentioning clause 9 over here. Why I'm not mentioning clause 9? Anyone? So you can unmute yourself and answer also. Perfectly fine. Okay. Yeah. Anyone? Why not clause 9 over here? You can unmute yourself and answer perfectly fine. No? Okay. Absolutely correct, Samanathan. That is applicable before appointment. I have to check the compliance of 139, 140, 141 before appointment. In this scenario, appointment is already done. And then I am approached. That's why clause 9 will not come into the picture. Clear? Any doubt? There is one more part, one more clause that will still come. Anyone? Which clause is there that can become that can be attracted, or that you might think will also be applicable in this scenario? Anyone? Part 7 of part 1 of second schedule. Grossly negligent, already taken. That is done. Anyone else with some different clause that you think might be applicable? See, that's where we need to think how provisions will be attracted. Yes, Samanathan. I'm not able to get your voice. Your voice is not audible. Might be some issue at your end. Okay. So how about clause 1? Okay. How about clause 1 of your part 2 of second schedule? Clause 1, part 2, second schedule. Yes or no? Do you think clause 1 will come into the picture? Do you think clause 1 is appropriate over here? What is clause 1? Part 2, second schedule. What is clause 1, part 2, second schedule? Quickly. Because see, it could appear, straightforward, but may not be. If you contravene any of the provisions of the act, regulation, or or any guidelines issued by the council, in that case you can be held guilty of professional misconduct. Code of ethics, guidelines issued by the council, in that case you are deemed to be held guilty of professional misconduct because you have violated code of ethics. So clause 1 will also come into the picture. Clear? Any doubt with this? Interesting question. It talks about the code of ethics, but at the background of it, a lot of things are applicable. Any doubt? Any doubt with respect to this one? If no, let us see one more question. Very good question I have.
Lending Bank Cooperative received a loan application from Promising Ventures Limited seeking additional financing to expand their operations. In support of their application, Promising Ventures Limited submitted a proforma balance sheet for the relevant period, which was duly certified by Mr. Rohan, a practicing chartered accountant, without verifying the underlying records. Relying on this certified proforma balance sheet, which presented a seemingly robust financial position, Lending Bank Cooperative sanctioned an additional loan to Promising Ventures Limited. Subsequently, the audited balance sheet of Promising Ventures Limited for the same period, certified by their statutory auditors, revealed a significantly weaker financial position and contrasting with the picture presented by the proforma balance sheet. This discrepancy raised concerns. However, upon inquiry with Mr. Rohan, he claimed that the certificate was issued on proforma balance sheet and not on actual balance sheet. As per Mr. Rohan, proforma balance sheet are estimated numbers, not actual numbers. Given this scenario, what are the potential professional and legal liabilities for Mr. Rohan, the chartered accountant who certified the proforma balance sheet? Detail the instances of professional misconduct, if any, for which Mr. Rohan could be held responsible.
So here, this is a given scenario. I will suggest take a minute, read the scenario again, and then try to answer. Take a minute, read the scenario again. So may I see in exam, if you can refer, see, as of now there could be a scenario where multiple clauses might be applicable. At that point in time, you have to provide the reference to those clauses. Okay. It depends upon how much or how many clauses are there which are applicable. But given a scenario, you need to also make sure that if it is a question of 4 mark or question of 5 mark, you need to write answer accordingly. So maybe 10 different clauses might be applicable, but you need to make sure that when you are writing the answer, it should be crisp to the point, not going here and there. And accordingly, 4 to 5 marks of question may have a 5 to 6 points on that particular part. Very good, Rajita. Anyone else?
Clause 2 of the part 1 second schedule will have right.
Okay, part 1 second schedule clause.
Clause 2, sir.
Clause 2. Okay, clause 2. Anyone else with some different answer? Anyone? What is clause 2 about? What is clause 2 about?
So as class 2 talks about if he certificate and submit his name of partnership, the firm report without examination of by him, by his partner or employee, or by himself.
Very good. Yes, absolutely correct. Anyone else with some different answer? Anyone else with some different answer? No? Okay. Now there are two things that we need to understand over here. Why not clause 2 and why different things will become. What is clause 2? We will understand, we will go for the clause 2 to understand in detail. So clause 2, yeah, certifies or submits in his name or in the name of his firm a report on the examination of financial statement. Unless the examination of such statements and related records has been made by him or by a partner or employee or by another chartered accountant in practice. Now here, few things are required to be understood. Number one, what will you call a report on the examination of financial statements? Here, when I say financial statement, it means that historical financial statements. Okay, historical FS I'm talking about. But if you go to our question, we are talking about pro forma balance sheet. It is only balance sheet, not a complete set of financial statement. Number one. Number two, we will again go back and we will see one more clause that I want to refer to over here. Clause number 3, permit his name of the firm to be used in the manner with an estimate of earnings. Very important part. Estimate of earnings which are contingent upon future transactions or in manner which may lead to believe that he vouches the accuracy of the forecast. Now, if you go back to the question, here, the pro forma balance sheet is nothing but the forecast. By giving an opinion on this pro forma balance sheet, okay, by giving an opinion on this pro forma balance sheet, what he is doing is he is vouching the accuracy. He is vouching the accuracy of the forecast. So in this particular case, I would say clause 3 will be applicable. Number 1. Number 2, there is one more clause applicable. Can anyone tell me which is that? Which is that one more clause is applicable? Quickly. One more clause is applicable. Which is that? Sorry. Come on, quickly. One more clause is applicable to this particular scenario. Which is that scenario? Which is that? See, by understanding this, we actually, kind of, we have to apply our analytical thinking. Then only you will be able to understand, this particular part.
Grossly negligence, clause 7.
Yes, very good. Grossly negligent, clause 7. But apart from that, there is one more. Grossly negligent, yes, clause 7 will be there. But apart from that, there is one more. Anyone?
Failed to disclose the material fact known to him.
Not that, but something similar.
Failed to report.
No. Here it will be failed to obtain sufficient and appropriate evidence to support his opinion. Now here he is giving opinion. It's not like that. He is certifying. Okay. But what he's doing is he's failed to obtain sufficient information. Okay. Or his exceptions are such material to negate his opinion. But here in this case, he fails to obtain sufficient information which is necessary for the expression of opinion. That is your clause number 8. If we go back to the clause 8, okay, fails to obtain sufficient information or evidence which is necessary for an expression of opinion. Now here, if you see the term which is used is opinion. It can be any opinion. It is not only the opinion on financial statement, it includes all opinions. Okay, means all opinions, certificate, because certificate is also opinion. You give absolute assurance in a certificate. Okay, so it is all opinions we are talking about over here. Plus, we have seen like fails to obtain sufficient information in our question. If you see, it says that without verifying underlying records, means he was not having sufficient information. Still, he issued an opinion by vouching the accuracy of the forecast. So, clause 3, clause 7, grossly negligent, clause 8. Clause 8. So 3, 7, and 8 will be attracted in this particular scenario. Are you getting the point?
Yes, sir.
So accordingly, we need to understand and analyze the question, what is given, why it will be applicable, why another thing will not be applicable. That you will only understand once you practice more, once you go in the depth of the question, understand the question word by word, break it down in different segments to understand further. Okay, then only you will be able to answer the question. And if we go to the answer for this one, so as I said, clause 7, clause 3, clause 8, you give the analysis and then you give the conclusion. Okay, so provision, analysis, and conclusion. These are the provisions part. This is the analysis and this is the conclusion. This is how you are required to answer to this particular question. Anyone? Anyone, any doubt? No? No doubts? Okay, if no doubts, then what we will do is we will take up some questions. Now, these are kind of the questions I want to take up is quick questions, kind of a rapid fire one. Like, you have to answer rapidly on these questions. Okay. So again, these questions are very small, kind of questions which are based on a quick revision, not further, but quick revision based. Okay, so let us see those questions. So these are quick revision questions, basically. Okay. So question number 1, we'll read quickly.
CA. Rohan, a practicing member, created a website for his firm. The website running on push mode includes a list of his prominent clients and testimonials praising his services. Which clause of the Chartered Accountants Act, 1949 has he most likely violated? Clause 2 of Part I of the first schedule. Clause 6 of Part I of the first schedule. Clause 11 of Part I of the first schedule. Clause 1 of Part 2 of the second schedule.
Quickly, which clause do you think he has mostly violated in this scenario? Come on, quickly. Which clause he has mostly violated in this particular scenario? Come on, quickly. Very good, Kushi. Okay. Very good, Samanathan. Which clause he has violated? Mostly, huh? That's why I'm saying most likely. There could be multiple, things we can if we dwell further, but most likely. The answer is most likely over here. So here, yes, very good, Samanathan. Here in this particular scenario, not clause 2, but clause 6 will be the answer because push mode. It should be pull mode. The website guidelines. Some might say, yes, sir, there could be part 1 of the second schedule also because website guidelines are there. But most likely, it is referred to the clause 6 only. So clause 6 contains the website guidelines and everything, and accordingly, we need to most likely will be the clause 6. Okay. Okay. So question number 2. Let's read the question number 2 now.
ACA in practice is offered to charge fees for an audit engagement based on a percentage of the net profits of the company. Is this permissible under the Chartered Accountants Act, 1949? Yes, it is always permissible. No, this is prohibited under Clause 10 of Part I of the first schedule. Yes, but only if the profits exceed 1 crore rupees. No, this is prohibited under the second schedule.
So what is the answer? Quickly. Very good, Samanathan. Very good, Khushi. Quickly, fast. Very good, Geeta. Yes, absolutely correct. Somaya, what is the correct answer? Very good. Yes, absolutely correct. So the correct answer in this scenario is option 2, like second one, that is, it is prohibited under clause 10 of first schedule. You cannot charge fees percentage of based on, contingent upon future finding or any area, except which are permissible. But in case of audit engagement, it is not permissible. Okay, in that case, no, this is prohibited under clause 10 of part 1 of first schedule will be the correct answer. Okay, there is no criteria of 1 crore. It is not permissible. Second schedule, no, it is not prohibited. It's prohibited in the first schedule. Okay, let's go to the question number 3 quickly.
XYZ & Co., a CA firm, was appointed as the auditor of ABC Limited, but the resolution for the removal of the previous auditor was not passed as per the Companies Act, 2013. If XYZ & Co. accepts the audit, it will be held guilty under Clause 8 of Part I of the first schedule. Clause 7 of Part I of the first schedule. Clause 9 of Part I of the first schedule. No misconduct, as it is the company's responsibility.
Which one? Quickly. 8, 7, 9. Which clause will be applicable? Very good, Khushi. Okay, Geeta. Which clause will be applicable? Okay, Samanathan. Quickly, fast. What is clause 8? What is clause 8? Accept the position previously held by another chartered accountant without first communicating to him. What is clause 9? Clause 9 basically talks about you accept the position of an auditor without ascertaining the requirements of 139, 140 and 141. Here he was appointed, but there was no removal of the previous auditor. How he can be appointed? If the previous auditor has not been removed, can you appoint another auditor? Have you complied with 139, 140 in this scenario? The question comes on that, not on the communication, but on the compliance of Companies Act section 139 and 140. If a CA is appointed, till the time he is not resigned, till the time he is not removed, you cannot appoint another auditor. Here, the previous auditor was removal resolution was not passed. How can you appoint another auditor? It will be clause 9. You are not ascertaining the requirement of 139, 140, and you are appointing another auditor, and you are accepting it also. CA firm is getting accepting also. In that case, if XYZ and company accepts, clause 9 will be applicable. Clear? Let us see the next one.
CA. Neha, an employee of a CA firm, signs a financial statement on behalf of her employer's firm. Which clause of the Chartered Accountants Act, 1949 would this action violate?
So, you have the options, read the options and then try to answer. What do you think will be the correct option here? Quickly. What do you think will be the correct option? These are the rapid answer questions. Quickly. Very good, Samanathan. Okay. Very good, Geeta. Anyone else with this? Which will be applicable? Very good, Khushi. Yes, very good, Geeta. Very good. So the correct answer will be clause 12. She's an employee, but not a partner. Not a partner or a CA in practice. If she is not CA in practice, how can she sign? Okay. If she is not CA in practice, then how can she sign? In that scenario, clause 12 will be applicable of part 1 of first schedule. Should be a partner, not employee. Clear? Okay. Now, question number 5. We'll read quickly.
A chartered accountant in practice enters into a partnership with a tax consultant from Tax Institute of India, Section 8 Co., in practice to provide joint services. Which of the following clauses deems this arrangement as professional misconduct?
Quickly, the options are given on your screen. What do you think will be attracted over here? Quickly, fast. Very good, Khushi. Very good, Samanathan. Very good. Yes. Very good, Geeta. Very good, Somaya. Anyone else? Quickly, fast. These are the quick questions you need to answer quickly. Okay, so very good. Yes, clause 4. Reason because he's a tax consultant. Partnerships is allowed with regulation 53B or 53A3. Tax consultant from Tax Institute of India, Section 8 company, not part of that. You cannot have partnership. Entering into partnership, not permissible. Clause 4 violates professional misconduct. Clear? Any doubt? Any doubt with respect to any of the part that we have discussed today? So I tried to cover as much as possible for the questions which are there, for the rapid rounds, more questions on the complex areas where we can apply the analytical skills. So the purpose of the session was to cover as much as practically possible, so that you guys can understand how to answer the questions, plus a quick revision of the clauses and everything that we did with the particular questions. Okay, now uh, if you have any doubts, please, you can ask. Not an issue. You can ask right now. You can ask in the next session. Okay. So this was your professional ethics quick revision as much as possible. If no doubt, guys, then I would recommend you to practice more. The more you will practice, the more you will understand. Okay. Practice more. And if you have doubts, you can bring in the next session. Okay. Okay. If no further doubts, then thank you, guys. Thank you for participating in today's session. I will see you in the next session. Yes, sir. Yeah. Thank you. Good day.